Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you my weekly update for week 37 of 2021, like every weekend. So you get full insight to my real money portfolio, which have a performance of 61.44% since the 2nd of December 2019 when I started this portfolio, and you get this update every weekend. So if you're new to my channel, just subscribe and ring the notification bell and you will never miss another video. So first of all, take a look at my transactions of last week. And first of all, I added 10 more shares of MI Homes for $60.82. And MI Homes is one of my bigger positions in my portfolio, and you just see here on the green dots on this chart when I bought my shares, and you see I started to buy at the beginning of the year and then just from time to time add. And so last week on the 14th of September I added 10 more shares for $60.82. And so now I just have 120 shares of MI Homes for an average purchase price of $63.59, and so I'm down 1.54%. So why I add to MI Homes over time? Of course, just because I think it's a great company, a great value company, a way undervalued company. And MI Homes really seems like a bargain. It's a high profitable company with a P/E ratio of a little bit over 4 right now, while the whole industry is at a P/E ratio of 7. And the price book ratio of MI Homes is only 1.22. Also seems very, very cheap. And so I just add on these levels more and more, and around $60 I think the risk and reward ratio is very, very good with MI Homes. I explained that a little bit more in my fully analysis of MI Homes. You find a link here up on the screen or down in the description below, and there I go through all the financial numbers of this company. Then I added also 4 more shares of Baidu for $161.22 on the 14th of September, and now I have 31 shares of Baidu overall with an average purchase price of $145. And so I'm up with the whole position almost 12%. That's quite nice. And of course also Baidu suffered a lot about the China crisis, the China stock crisis, and the regulatory of the Communist Party. And from the peak at $339 on February 19, it's now down over 50%. This is quite a lot, and I think this is way too much, and Baidu seems way undervalued too. If we look at the numbers of Baidu, and on August 12, Baidu released the second quarter financials, the revenue rose 20% year over year and 11% since the last quarter to $4.85 billion. And the earnings report shows that for the quarter, Baidu produced $843 million in free cash flow. That represents 17.36% of its $4.855 billion in revenue. That is a very high and respectable free cash flow margin. And this $843 million in free cash flow is more than twice as high as the $400 million in free cash flow it made during Q1. And so Baidu is able to generate highly free cash flows, highly profitable company, just what I like. And it seems like the market just overreact here. And so I just buy more and more of Baidu, and now with my 31 shares I'm quite happy. And if it will dip to maybe $150 again or even lower, it's very likely that I will add over time. And of course there's risk with the regulatory, and you never know what the Communist Party will do next, but in the long run I think Baidu and also my other Chinese stocks, Tencent and Alibaba, will be fine because the business model is just very, very strong. And I also make an analysis of Baidu. You also here find the link up on the screen or down in the description below. So feel free to check this out. There I also go through all the financial numbers and tell you when and why I bought in the first place. Last but not least, I bought last week Intel. Intel is the biggest position in my portfolio, and I just added 10 more shares for $55.46 on September 14th. And also here with the green dots, you see all the buys I did over the last few months. And so right now I have 179 shares of Intel in my portfolio for average purchase price of $52.02. And so I'm up 6% with the whole position. And why I add to Intel more and more, just because Intel seems very low valued in the market compared to other companies out of the tech sector, still is able to generate a lot of free cash flow, is still a cash flow machine, is still the market leader in the CPU business. And then currently, especially the automakers have big problems about the shortage in microchips. And I think Intel can take advantage of that. And this could be also a big opportunity for Intel in the future. Intel right now is just trading at a PE ratio of 12, which really seems very, very cheap, especially if you look to other tech companies, which sometimes not even are profitable. And then with the new CEO, it seems like they really move forward. They will invest, for example, 80 billion euro in Europe over the next decade. And on top of that, Intel plans to open up a semiconductor plant for automakers in Ireland as well. And Intel CEO Pat Gelsinger asserted that the company will announce the locations of 2 major new European chip fabrication plants by the end of the year. So a lot of movement, and it seems like Intel could cut the corner and maybe can take big advantage of the chip shortage in the automobile sector as well. And so I'm very bullish for Intel, especially from this very low valuation point. And also here the risk and reward ratio seems pretty good. And so I add over time more and more also to Intel. And also with Intel I make a deeper analysis almost a year ago, and you find the link here up on the screen or down in the description below. Check this out and you understand maybe a little bit better why I'm so bullish for Intel. Even if it's not sexy right now, I know that, but this makes it even more interesting for me as a long-term value investor. Then take a look at the received dividends last week, and that's very fast because I didn't receive any dividends. And then jump to the performance overall. First of all, take a look at the whole pie of my portfolio, and then you see that Intel with 8.03% is the biggest position in my portfolio, followed by Berkshire Hathaway, MI Homes, Tencent, and so on. And also Baidu as relatively new position with 4.16% is already in the middle of this whole pie. And then I still sit on 22% of cash, and I just sit on a lot of cash because it's very difficult in this overall high value added market to find good opportunities. And so I just add over time to my companies which I know very good and which I think have a very good risk and reward ratio. And so here a view on all of my current holdings, and you see Imperial Oil is the best performing stock right now in my portfolio with 83.72% performance, followed by JP Morgan, Bank of Nova Scotia, Leggett & Platt, and so on. And at the end of the table you see Tencent and Alibaba, the two Chinese giants, minus 17% and minus 25%. So this will maybe take a little bit of time before they come back. Overall, I'm very bullish for them, but I will not add to them at this point because I don't want to overweight too much the Chinese market. As I said, maybe I add a little bit more to Baidu, but Tencent and Alibaba I'm set already. Of course, if we see another bigger dip, then maybe I change my mind. But for now, I will just stick with that and then see what happens. And as I said before, if you're new to my channel, you find deeper analysis to all of these companies on my channel. So feel free to check this out. And just to make this complete here, also a view on the closed trades since the start of the 2nd of December 2019. And here you see all the trades which are already finished. And with this closed trades and the current holdings, I have a performance of 61.44%. You see here on the chart. Lately, of course, this is stagnant, and mainly this is because of the China investments, which are not started so good, but as a long-term value investor, that's not a big deal. I'm just quite happy to invest to what I think are reasonable prices also into the Chinese companies. And so I will stick with it, add here and there, and then hopefully overall have a good performance. And if you like this whole idea, then just subscribe to my channel, follow me on my road as a long-term value investor, and then we will see once or twice a week, and of course next weekend with another update on my portfolio. Thanks for watching today. See you then. Take care. Bye bye.